Hey, happy Friday. Hey, I thought I'd just do a quick mortgage update. A lot of news this week, so I thought I'd just send a quick text with some what I think is useful information. So first article that we're going to go through is just from the Wall Street Journal. So you've seen rates, fall for about 5 weeks straight. So that's good when it comes to the housing market in general. Average rate 6.3, which basically means there's going to be some rates lower than that, some rates higher than that, depending on whether you're paying points, depending on whether or not it's a VA loan, conventional loan, so on and so forth. The reason that you've seen rates fall is because inflation has gone down some. So you've seen the 10-year Treasury yield drop from something in the low fours to below 3.5, basically because you've seen some retrenchment in inflation. So if that continues to happen, rates follow inflation. So if inflation continues to moderate or go down, you're probably going to see rates continue to go down, slow and steady. You've seen some widening in the yield curves. So we get a lot of questions about ARMs. Right now, there's not a ton of benefit in ARMs because short-term rates are actually higher than long-term rates. So if you go look at the 2-year Treasury yield, it's about 4.25 versus 3.43 on a 10-year Treasury yield. So the spread that's normally there just isn't there in today's market. And if you go to our chart here, which looks at bond prices, you can see anything that's in green is good. That means that rates went down. So you saw this big move down in rates here, which is when we got some November inflation. And you've seen way more improvement in rates over the last 2 weeks or month than the opposite. So you're back to probably where rates were back in September. So these were the high points in rates, the low points in prices, and you've seen this sizable move up. So I think that is promising news from a housing perspective. And then we'll see what happens. Fed raised rates again yesterday, a 0.5%. Again, they're talking about short-term rates, not long-term rates. So we got a lot of calls from clients saying, hey, did rates go up? The answer is no. They actually moved down a little bit. Again, anything in green here means rates improved a little bit. Stock market's getting beat up a little bit today because of some retail sales numbers that came out. So actually, that's probably helping rates a little bit. Money's moving from stocks to bonds. So anyway, I'm going to start doing these every week or every Friday. So hope you guys have a great weekend, and we'll talk to you later. We'll be working this weekend, so if you have any questions, feel free to call me. Bye.